Hi, YouTube.
Hey, YouTube friends and family, it's your boy GB Reviews, and today for Wealth Wednesday, we're going to talk about how during this global pandemic, you can make yourself at least better off financially, if not continue to build wealth. And so we're going to look at some of the things that you should be doing if you have the resources and the ability to. We understand that, these are definitely challenging times. People are losing jobs. Other folks are getting COVID-19 and some people are recovering, some people are not. And we definitely need to make sure that we are mindful of that. But in these times, there are some opportunities that I think when we look back on it, we will see that this was an opportunity for the world to slow down and for you to reassess some of the things that you're doing in your life. So I'm going to start off talking about how I personally can build wealth and how you can take some of these tips to hopefully build wealth for yourself. One of the things that we're going to start off with is just looking at how has your life been affected? Do you still have a job? Are you on unemployment? Has your employer gone back to work? Are you a business owner? These are the things that will determine what are your options and your avenues for, at least if not building wealth, you are having the opportunity to try to reduce your debt and maybe save some money. When I say that in a way that many of the companies out there that service your mortgages or your car loans or your credit card loans, actually under the government, the CARES Act, they are allowing you to suspend 3 months of payments for housing, for cars, and for qualified credit cards, depending on who your company is and who your servicer is, and other loans. And I would say for you to definitely research that. The 3 months are suspended, they're not canceled, which means you will eventually have to pay them. But depending on the debt and depending on the interest rate on that debt, it may be in your best interest in the short term, at least until things get better, to suspend those payments, because what you can do is you can use those payments that may be on lower interest debt to pay down higher interest debt. I'll give you an example. So say you have a car loan and your car loan is, $500 a month. The interest rate on that is like 2%, 1%, depending on how good your credit has been. And you have a credit card that has an interest rate of 16 or 18% interest. But your credit card and your car company both allow you to suspend payments for 3 months. What I would advise you to do, because the interest rate on your credit card is so low, even though the interest rate will still be accruing, taking that $500 a month for 3 months and paying that $1,500 that you now have towards your credit card bills. Again, this is assuming that you're still working and you're still earning money. It is better because you're paying down that the higher interest credit card payments, because you, in most cases, would not be able to make those types of returns on most investments in that short period of time. So you're basically, if you had a 2% car loan and you're paying down that higher interest debt, you are effectively making 13% on that money because you're paying off that debt faster. So I would say look at the car loans that you may have, look at the housing loans that you may have, look at your credit card payments, and see if you can suspend those for 3 months. Many companies are offering it with no, you don't have to show that you're not making money or anything like that. And that will give you some free cash to pay down other bills that are either higher interest rates or more pressing bills. And so that would be my first tip. Some of the things that I'm also noticing for me is that because I'm doing work from home, I don't have the transportation costs. Transportation costs are, aside from food and rent, are some of the largest costs that people have. Some people commute an hour, 2 hours, 3 hours a day to get back and forth to work. And if your job is one of those jobs that allows you to work from home, you now no longer have those transportation costs. So that is a cost savings. And that money that you're saving, either put in a savings account, or if you have higher interest credit cards, and I'm going to keep saying this, if you have higher interest credit cards, you want to pay those higher interest credit cards, because the goal is to come out of this pandemic better than you went in. And I say that not thinking about getting COVID-19, but more so because the world has slowed down, is because there's so many programs out there that are trying to be accommodating of people's different financial situations. You may have the opportunity to be better financially secure, again, if you have a job and if you are able to go to work. than when you went into this. The other thing that I'm noticing personally, and I'm going to drop some pictures in here, some of the things that I'm learning to do, is that I'm cooking more. And so with cooking more, you get just a lot of benefits in terms of spending less money out, eating at restaurants and takeout. But you're also, because you know what the food you're making usually better health decisions about the food that you're buying and the food that you're consuming. And so you will get an additional benefit of not spending as much money and also potentially being healthier at the end of COVID. Entertainment costs. I find that, yes, I am subscribing to more streaming services, but I'm not spending money out. I'm not going out to bars. I'm not going out to restaurants. I'm not going out to movies, concerts. So entertainment costs are down. In that category that I did mention from transportation costs is that because there is a global pandemic and because a lot of places are restricted from travel, you will find that the vacation that you had planned and you thought you were going to spend the money on that vacation this year, you no longer are going to take that vacation. So if you have the opportunity and the ability to do so, again, I'm going back to my original, make sure you pay down your higher interest credit card. So the money that you saved this year from not going on a vacation, not going on a trip, not going to Orlando, because you definitely don't want to be in Florida, you can now save that money or either save it or you can put it towards your higher interest credit cards. I would say the other thing in terms of building wealth that you should be doing during this kind of COVID-19 period is explore some of the things that you had interest in when the world was definitely much busier and try to become better at those things. And when I say that, I tell people all the time, make sure you come out of this pandemic better than you went into it. But are you a good painter, or are you a good artist, or did you like to cook, or were you good at coding, or if you wanted to learn how to code, did you learn how to code during this time period? Have you tried to take up a foreign language? Are you trying to learn something about economics or the stock market? Figure out something that you can do that is going to educate you more and to potentially lead into my next topic, developing a side hustle. While you are working from home, you are now finding that you may have more hours in the day because you don't have those transportation times that you used to have to count for your day, right? So I would say make sure you try to develop a side hustle. Side hustles can be anything from starting a YouTube channel like this or doing things like doing delivery service for Uber Eats or from DoorDash. You could become an Uber driver, but I think that the demand for Uber drivers has gone way down. So that's maybe not a good one, but there are other things that you can do that are things that won't put you more at risk, but will allow you to either stockpile cash for a savings account or pay off some of your higher interest debt. And then I would say another thing that will help you to develop that wealth mindset is to try to become more fit. Being more fit has many benefits, but it also just makes you think clear. It helps you to be less susceptible to diseases and underlying conditions that may make you more susceptible if you got COVID to becoming grossly ill. And so I don't really have any more tips to this. I know it's challenging. I know some people aren't working yet, or some people are back to work, but they're only working in a minimum fashion. But remember that this is an opportunity. Even though it's a tragedy, it's also an opportunity for you to, again, look at how you can redistribute some of the money that you were paying out before that you may not be paying out now, pay off your higher interest credit cards, try to put money towards savings accounts. One thing I did mention in this, just because that many people aren't kind of in the financial situation to look at investments, but the real estate market is a good place right now if you have disposable income and you can get real estate, because right now people are selling real estate relatively cheap depending on what state you're from. And then also you can put money into the stock market. What I'm finding is that during the early parts of COVID, the stock market went way down. So you were basically getting stocks at a discount and you're getting your 401k buy-ins at a discount. Now the stock market is back up, so people are realizing a lot of gains. But I would think that as this pandemic persists, the stock market is going to go down again, and that will make the cost of entry very low. So if you do have a little bit of disposable income, I would say put something into a Roth IRA, a regular IRA, if you don't do that already, or invest in individual stocks. And I'm looking at companies that pay dividends. And again, I'm not a certified, accountant or a financial advisor, but I spend a fair amount of time talking to my friends that are financial advisors, and I have a financial advisor. And I've been recommended to make sure that I put some money into the stock market when it's on a discount. Right now, it's like I said, it's high, but I suspect the pandemic is probably going to persist for at least another 6 months to a year, and so we will probably see more kind of up and down fluctuations in the stock market. So looking at our summary of things that we want to do, make sure you pay off higher interest debt, make sure you cook more so that you are getting some health benefits and also saving money from eating out and ordering from delivery services. Make sure you redistribute some of that entertainment cost that you were spending before to savings accounts or your higher interest credit cards. Try to become more fit. Most of all, get a side hustle. Side hustles can turn into regular hustles. Again, thank you for joining me for this Wealth Wednesday. Hopefully next week we'll have my financial advisor back and we're going to talk about banking to let you know what we think of some of the online banks versus brick and mortar banks. What do we think about credit unions and how these things can help you to build wealth? So with that, it's your boy GB Reviews. Please subscribe to my channel. Hit the like button for the algorithm. Please leave comments below if you have other tips that people can do during COVID. I know, like I said, it's a hard time, but you should try to come out of it better than when you went into the pandemic. And then most of all, please let me know things that you are doing to cope with some of the stresses in the comments. But with that, it's your boy GB Reviews. Please subscribe and like below.
Subscribe, but like below.